Like I said, you're very welcome to this free live webinar tagged Choosing Effective Stop Loss Points. Choosing effective stop loss points. Now, the reason why it's important that we look into issues like this outside the regular foundation courses and advanced courses is so that we can hit some nails on the head. And stop loss is a very key part of trading. When you speculate in the market, you must understand that you're taking some level of risk. And in as much as your trade ideas should have or should be taken only when you have a strong conviction, a strong confidence level, when everything aligns. But even after that, you must still protect yourself just in case you're wrong. The idea is finding quality trade ideas helps you find high probability, and profitability in the market, right? There's a higher chance you're profitable, but it does not eliminate the possibility that you're wrong. So, in a way, to protect against such possibilities is why stop losses are part. Now, we're going to delve into this very quickly and then help ourselves understand this clear enough, how we are supposed to approach this, why setting stop losses are important, and when we do, what do we pay attention to when we want to set them? Can they be modified? If yes, how do we go about it? Please, be in a class like this, it's also open to questions. So if in the course or during the course of the class you have a question or two, you can always send a message in the Q&A section and I would attend to them as best as I can. I will try to attend to some of them while in the middle of the class, but it's possible I attend to majority of them at the end of the class. Is that okay? All right, so quickly delving into this. Before we go on at all, let's first start by discussing, the idea behind stop loss. Now, this class, by the way, is designed to talk more about the risk management side, mostly stop loss. But in case you're in this class and then you have not attended trainings before at HFM, right, please, we have subsequent classes that you can always attend, foundation course that you can always attend as well. You can always reach out to us after now, and then we can always look into it. Right? So, crossing over to the charts. All right, we're getting started now. Now, quickly, when we say stop loss, what exactly are we talking about? When we say stop loss, what is we talking about? Stop loss is simply an order to close your trade at a certain price if price continues to go against you. Stop loss is simply an order to close your trade if price continues that I'm buying a particular asset. If price is going against me, that means price is falling, right? It's going lower. If it gets to a certain point, enough, it's enough. That's the idea. That I do not want to risk more than a certain amount of money on any given trade in the market. That's the idea. That's just the idea. And it's quite important that we set stop losses because when you trade, accounting for the possibility of a loss involves putting a limit. You don't want to trade without having a stop loss on your trades. Because by not putting a stop loss, you're totally exposing your account to any potential risk in the market. I would never justify placing trades without stop losses, some form of stop loss. And the reason is because in the market, you cannot always plan for every single outcome. As a matter of fact, every single trade has the possibility of playing out in one of three ways. You can lose money on a trade. That's true. You can make a profit on a trade. You can also break even on a trade. Now, the probabilities of either of these outcomes occurring differs based on your understanding, the type of trade that you have taken, and your skill set, your skill level, right? Ideally, a good trader, having gone through our classes, understood what's going on, finding quality trades, obviously has a higher probability of making profit, right? The profitability on that trade is on the higher side. The probability of being profitable on that particular trade is on the higher side. But there's also a chance where you break even. Break even is a position where you close out the trade at the point where you're not really making a loss nor a profit, basically getting out at the price at which you got in. So there's that. But the third possibility, which has to do with a loss, is one that we're looking to focus on today. Now, yes, it's not the most likely outcome, but it's possible. And stop loss is saying that in a case where that happens, I do not want to lose more than a certain amount of money in my capital. The reason why I cannot justify, not placing a stop loss is you can't account for every single possible development in the market. Yes, we have scheduled information, the news calendar, basic market themes or general market themes that we are currently focused on. But something new can happen in the market. Something that is not really planned for can happen. And if it happens, it can obviously disrupt what you're doing, particularly when it happens against what you're doing. Let me give you an example. Let's say you're buying, let's say, Australian dollar versus the US dollar, for example. You're buying that particular asset. You expect the price to rise. And the reason why you're buying that asset is because the market environment is positive. We have a risk on market environment. So that's what you have. Now, that's established, but something new, breaking news can occur in the market. Let's say we have a geopolitical development that was not really, in talks before, and just happens and is negative. Of course, markets would almost immediately revert to risk of negative market sentiment. And that happens, your current buy long position that you're holding on AUD USD is going to turn on its head. You did not plan for that. There's no way you could have seen a situation like that because it wasn't happening before. It was just breaking news, basically. And when that happens, price starts to go against where you expected, where you were entering your entry price or your trade idea in the first place. Now, if that's the case, that's a loss. If you did not have a stop loss in place, right, you've exposed your account. It makes it worse when you're trading with leverage. You're trading with maybe high leverage or high exposure or a chunky volume or lot size. Then that sharp movement against you could mean something more tangible in terms of a loss for your account. And that is why stop losses are key. So now that I understand this, how do I set stop losses? Before now, being in classes or talking to traders regularly, what I noticed is a lot of traders already have, maybe from prior lectures they've had, or maybe just an idea that comes to them. A lot of traders like to have a fixed number of pips for stop loss. A lot of traders do. And you hear something like, oh, I always trade 20 pips. Oh, I always trade 30 pips for stop loss. I always fix a 40 pips. What that means is you put in 30 pips is a price moves against you by 30 steps, right? You want your trade to be closed out. That's what it means. The challenge that I have with having a fixed number of pips for stop loss is that not all trades will that 30 pips fit. 30 pips may be sufficient for a trade or two, but it may not be efficient enough for other trades. It may not be. Where 30 pips is appropriate for one trade, for another trade, it may be too small. For another trade, it may be too much. So I rather approach this by adapting my stop loss based on the chart. What I'm saying is, instead of using 20 pips, 30 pips, 40 pips, just something random for my trades. I would rather adapt my trade to what I have on the chart. How do I do this? You can put this down. I want to give it to you as a simple principle that you can always use. You can put it down. Let me see if I can get it out to you in a write-up. When you're buying, when you're buying, or let's see if we can type it out so that we can have, more people maybe see that or take a screenshot of that, or maybe even write that out. So let's write it down. Reason why I want to list it out for you like this in very simple statements is so that it can help you too as well. So when you want to trade, you can always go back in case you forget or whatever the case. You can always go back, revert back to, your stop loss or to your notes, and then get the information out there. When you're buying, right? When you're buying, set the stop loss below the next swing point, right? Because say next support, for example. You can say it like that. And when you're selling, set the stop loss above the next swing point, right? I could even say, in this case, the next resistance. When you're buying, when you want to buy, I want to buy this particular asset. I want to step into the market. Instead of using something just random for my stop loss, I would like to identify the next swing point, the next lower swing point, next support level, area, or environment, and anchor my stop losses just below it. But when I'm selling, it's the opposite. In this case, I want to set my stop loss rather above the next swing point, that is the next resistance above. We're going to do a couple of examples now, and I'm going to explain my thinking behind this very quickly. Let's go back to the chart. Now, back here on this chart, right? I want to believe that being in this class, you've gone through, or you know what I mean by support and resistance. You know what I mean by stop loss in itself, right? If you're here and you're totally new, you've never really done, you've not really done trading before, or you've not really attended any training per se, you can always attend the HFM courses, right? The foundation course is there to help you. All our clients are assigned account managers. Account managers are there to be like a relationship person with the broker. So you can always reach out to them. And then they can always guide you on how to get started with the trainings. But then here, let's assume I want to place a trade, and for I haven't done my analysis and my research, I decide I want to sell this particular instrument, USD card, right? I decide I want to sell this particular instrument, USD card, and I'm looking at this particular swing point. I can look at it in two ways. I can look at this total environment here, really. But by the way, stop loss and take profit, support and resistance areas are zones, not necessarily lines. And the reason I'm picking this area is obviously we can see a swing low going back to the 24th of May right here. A couple of highs as well, going back to 28th of May, support level as well here, going back to 9th of May. Also, one again yesterday, being Thursday. So we have this environment. There's a round number here as well, a major round number, 1.365 around this level. And then yesterday's low. So, I mean, this total environment, right, can be seen as a major area of resistance right now, support resistance right now from where I want to sell. Now, let's say I want to sell from here. And I decide to place a pending order right here, maybe somewhere in the middle. right? I placed an order here to sell this particular instrument, USD CAD, not just because of the resistance area I currently have, but because I've done my analysis based on strength and weakness. I've established all of that. This is just an example, but I want to believe you know that before you place a trade, it should not just be because of support and resistance, right? It should be because you've done your research analysis. You know, the dollar is weak, the CAD is strong because of their reasons, either individual or collectively as a market sentiment or fundamentals, and then you decided to place a trade to sell this asset. So that's already established. Now, if you want to sell from here, I'm saying I don't want you just putting the number of pips just anywhere, because if I was going to put, let's say, 30 pips stop loss around here, it would be around, let me see, the entry price is 1.36536. So my stop loss would be, if I'm using 30 pips, it would be around 1.36236. So let's just fix that up. Just for stop loss, for example, 1.36, 1.36236. Oh, I should be adding rather. Excuse me, I should be adding. That would not be 1 point. I'm selling, right? So you should be adding 368. That would be 8 rather, since I'm selling. Thank you. 8 36. All right, there you go. So I have that. I set my stop loss. Good. Now, from what I have on the board, I basically just sold from here, this enterprise, this clear area of, support resistance, very major round number, all of that in the middle of that, because I should have been selling based on my analysis. And I decided to just pick a random number of pips, 30 pips for stop loss. And there I have. Now, this is what some people do. Some people have stop losses just random like that. What I'm saying is, instead of doing it randomly like this, I'd rather anchor my stop loss above the next resistance area or the next swing point. Now, for me, the obvious swing point for me is the highs of today. This is the obvious, obvious swing point for me. That is the obvious high level for price on this particular day. For me, is this right here. So me putting my stop loss there is me saying that I'm trying to move away from where my entry price is, further away from the next point where price can reverse to get me into the market. Now, this is simply the rule. If I was buying, for example, if I decided to buy as well, if I was buying from the same area, this is the next swing point I'm seeing, right? So my stop loss would be just below it. That's what I'm trying to say. Now, why is it important that I do it like this? You must understand that when it comes to setting stop losses, it's a way of limiting your risk. Limiting your exposure, fine. But you do not also want to be too close to your entry price, all in the name of trying to set a stop loss. You don't want to boot your stop loss. Scott gets in the way. You want to make sure that your stop loss, yes, you're setting stop losses, but you're leaving enough room for price to oscillate. And this is what I do. Now, in this case, how many pips is this? Well, this is around 42 pips thereabout. This is what I would have done. That means that if I was to be on, this is just one trade. If it were to be on another instrument, let's say I was doing the same thing on another instrument, right? Let's say I'm doing this on another instrument. I'm trying to place a trade right here on a different time frame. Let's say this time around, I'm trying to buy here, right here, right from this overall environment here, this overall region right here. Let's say this is what I'm trying to buy from, and I place a pending order right here to buy. In this case, the next swing point will be down here, right? Just below this. How many pips? Let's see. Let's set it up. Modify, right? This overall environment. Let's say 156.7. 400, 156.400 as an example. Let's say this is what I have. All right. So let's say I have this. In this case, this is about 60 pips. You can see it's different. Now, I chose this swing point. You could have chosen something else. You could have said that this is your own swing point and said that, oh, this is the level you want to anchor your stop losses around. If that's the case, fine. My point is just make sure that you're anchoring your stop losses beyond the next level of support if you're buying, or above the next level of resistance if you're selling. It also means that your time frames will also be important. It means your time frames will be important. Not just your time frames. The type of trade also has a role to play in setting your stop losses, but every single trade will have a different stop losses based on what the formation of the chart is, because the charts are not all the same. What is the reasoning behind this? Why am I, trying to do it this way? The reason is simple. By trying to set my stop loss like we tried to do in our first example, I am leaving enough room for price to oscillate. Ideally, I haven't done my analysis. If price pulls back to this environment, if price pulls back to this environment, it should trigger my trade, and I expect price to move lower based on my analysis, probably to the next key area of support right around here, around S2 here. That's what I expect. But I also know that before that happens, I could get situations where price pulls back. Market is not perfect, by the way, and price meanders a bit above before it starts coming lower. I could have that. As a matter of fact, we have this a lot of times as well, where price pulls back, goes beyond our entry price before it eventually comes down. So what I'm trying to say is just putting your stop losses anywhere you like, right, could make such that when price oscillates above your entry price and it gets to any of this level, you're knocked out. You're prematurely knocked out of your trades. And that can be very, 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 very annoying. So in a bid to, protect yourself from that, leave enough room. Now, the concern here would now be that, oh, if I leave enough room, is that not too much risk I'm taking? What's the point of setting a stop loss if the gap is plenty? Because if you look at this at about 40 pips thereabout away, we're looking at, for the minimum lot, a mini lot, you're looking at, say, it won't be up to, but let's say $4 for the minimum lot. For a mini lot, I'm saying for a micro lot, by the way. For a mini lot, that'll be around $40, maybe a little less than that. For a standard lot, that'll be around $400, right? So it depends on the lot size you're trading. But my point is, for somebody trading a micro lot and you feel like that 40 pips is too much, and if you're risking $4, that's a bit beyond your 1%, 2% risk that you're looking to take on your trade. Now, if that's the case, I understand that, right? What I try to do where possible is to reduce my lot size. So if I'm trading a mini lot 0.1, and I feel like the gap for my stop loss is too much of a risk for me, it's beyond the 1% risk I'm willing to take, then I drop it down. Instead of trading a mini lot of 0.1, I go on to trade somewhat half of that, 0.95, right? 0.05 or 0.06 or 0.02, based on just trying to fit in my lot size back into the percentage risk that I'm trying to take. A trading calculator can help you with that. If you go to our website, hfm.com, right under tools and education, you see risk percentage calculator, right? So you get that. That can help you with that. But I'd rather do that. In a case where you are certain, maybe you're already trading with the micro lot, you're already trading 0.01, where there's really no half of that or lesser than that you can really take, right? What I'll do instead would now be to try to reduce it. This is not a law. I like this idea because it can be very helpful, but it's not a law. What I mean by that is, in a case where this is too much, I try to adjust that. After all, we pick this level as my own. I pick this level as my own anchor, as my own next swing point. For you, this level could have been your own next swing point right here, just around this. And if that's the case, your stop loss will be anchored somewhere, somewhat here. This way, you have still used the same principle, still anchoring your stop loss above the next resistance, but in this case, you're only risking about 28 pips thereabout in this case. So my point is, you can apply the same principle to any trade of yours, really. I like this a lot because it's more effective in the sense that it allows enough room for price to oscillate and move in the direction as long as I've done my analysis properly. So it helps me with that. Another thing that it helps me with is to allow the trade play out. You see, when you have too short stop loss that is too close or too wide a stop loss, not anchoring it this way, you don't have anything to look forward to in terms of a point of reversal for price. What do I mean? What I said, before I say what I mean, what I said just again is when you anchor your stop losses just, based on random numbers of pips, just too much or too low, not using this system, right? It doesn't give you that room to allow the trade play out. And the reason for that is there is nothing that you are anchoring on for a point of reversal. So what I'm saying is, now that I've tried to set my stop loss like this, I know that if price pulls back to my entry and triggers my trade, right? So yes, I should be on my way. But in a case where price moves above my entry price right here, price moves above my entry price, I'm looking forward to this next resistance area as the area where price should hold and move lower from, just in case it even gets there. If that level is no longer holding, because ideally, when you've done your analysis, I expect price to go down based on X, Y, and Z. Price should go down. Price moving on to resistance should help, trigger and push prices lower. But in a case where that resistance does not hold, and price moves a bit above your resistance area, towards the next resistance area where you've anchored your stop loss just above, that should also hold and push price lower. Ideally, price should not have enough momentum to be breaking through resistance to the other side and moving higher and higher. So in a case where I have a trade idea, I've placed my pending order, price has triggered my trade, it's going a bit above, that's against me now, and it is getting towards my next resistance area, that's where above which my stop loss is anchored. I can use that area as a gauge. If price breaks clearly above that and closes clearly above that, then just maybe my bias is wrong. That can make me also come back into view and feel like maybe this is not working, because price should not have enough momentum to be moving past that and breaking past those levels. That can help me. Does this make sense? I want to believe that we're following. So by anchoring this way, first of all, you allow enough room for price to oscillate, right, beyond your entry price. You're not staying too close to your entry price, right? And then because you've anchored it beyond the next key area on the chart, if price even moves above your entry price, in the case where you're selling, and it gets to the next resistance, price should move lower from there. You have put, let's call it, another layer of defense between your entry and your stop loss. Can stop loss be modified? Yes, of course. Stop losses can be modified. The fact that you set your stop loss like this, and then you have, let's say, a 40 pips gap like this for your stop loss, it can as well be modified. If you feel during your trade that you need to adjust your stop losses, then you should, but do not adjust your stop loss out of fear or greed. What do I mean? Mostly fear, because it's stop loss now. Do not say, oh, because price is approaching my stop loss, is about to hit my stop loss. If I can only move it beyond that a bit, move it further backward, right? Maybe price can reverse, because I'm afraid of being knocked out or losing the money the amount that I've already specified. Now, the reason why that's a problem is how long are you going to keep moving the stop loss? That's the question. Is it that if price gets to the new environment, you're going to move it further backwards again? And you know that the moment you keep pushing it backward, you're already increasing your risk. It's no longer the 1% you had already specified earlier when you open the trade. It's now more. It's now 2%. It's now 3%. That's one of the disadvantages of that. So you don't want that. Instead of moving or adjusting it based on fear, I rather move my own objectively. By the way, one of the easier ways to allow your trades play out is if you've accepted the risk. Before I talk about setting stop losses objectively, let me quickly deal with this. You see, taking risk and accepting the risk are two different things entirely. I place a trade. I have my stop losses in place, intact. And on this particular trade, I'm looking to risk about, say, let's say my stop loss is about 30 pips. And I'm trading the mini lot, that's like $30, for example. In this case, if I don't accept that $30 as a possible loss on this particular trade, it will be difficult for me to allow the trade play out. It's going to be difficult. Because I have not looked at my account balance, in my mind, subtracted that $30 that I would have lost if it hits my stop loss from my balance, looked at the balance, what's left, and feel like, okay, I feel like it's okay, I don't mind. And then you let the trade play out. Now, this is not saying that you are being a doom merchant or you're paying, you want the loss. No, it's just you feeling or accepting that risk. What does that do for you? If you've looked at the worst possible outcome, barring slippage, by the way, and then you feel like, you know what, if price gets to this stop loss and it takes me out, I would have lost 30 pips on a mini lot. That would have been $30. But if it's a micro lot, let's say for a major currency pair like Euro USD, for example, that would have been, say, $3, right? If I've accepted that loss and said that, you know what, if this happens, it's okay, then it becomes easier to allow the trade play out. There's no need to panic or be afraid because, I mean, the worst possible outcome, you're fine with it. But if you've done that at the beginning, just before you place the trade, and that worst possible outcome is not something you are okay with, it's not something you can swallow, then you probably shouldn't take it. Or you should reduce the risk on that particular trade. So I don't want you adjusting stop losses based on fear. I want you deciding what your stop loss will be ahead of the trade, looking at the dollar amount that you're going to lose if you're wrong, and accept that. If you can't accept it, reduce your volume or reduce your risk on that particular trade. But if you've accepted it, allow the trade play out. Now, if prices, when I say allow the trade play out now, by the way, I'm talking about setting it properly like this. Now, if you've now done that and then you want to adjust your stop loss. Don't do it because you're afraid the price is about to get there. By the way, you should have eliminated a big chunk of fear, having accepted the risk. One way I adjust the stop loss is by using a trailing stop. A trailing stop allows you to, set your stop loss such that it trails price. And as price moves in your favor, your stop loss also automatically adjusts based on the number of pips that you have set. You can set it such that you put let's say a 20 pip trailing stop right there. This is how it's going to work. As price is moving in your favor by 20 pips, your stop loss is adjusting by 20 pips. Right? So let's say this is it, right? I place my trade right here. I have this. If I want to modify this to have a trailing stop, I can simply right click on the instrument, come to modify order. But why I have modify, oh, is this here? No, that's for partial closure. Okay, that's what I'm trying to say. Now, when you right click on the instrument, hit trailing stop. Hit trailing stop. Not modify now, hit trailing stop. What is 30 points here mean is 3 pips and 0 pipettes. And I feel that's small. So let's say I want to, use a trailing stop of say 20 pips. I have to come to custom and put the 20 pips, right? So if I say 20 pips, don't forget you add an extra 0 to account for the pipette. You always add the extra 0 to account for the pipette. So I do this and I hit OK. What it simply means is if once my trade is triggered, if price moves in my favor by 20 pips, my stop loss also automatically reduces by 20 pips. And that would even continue. Even when it gets into the positive region, it still continues on and on and on like that. So that's one way I can do that. And I do this I don't do it automatically a lot of times, but that's the automatic way to do it. I don't do it automatically a lot of times. I adjust it manually most of the time. What do I mean by manually? That is, if I place the trade, right, I'm usually on my screens more of the time or close to my screens within 2-3 hours. I get to my screens one way or the other. Now, what I do is if price has moved in my favor, I then automatically adjust my stop loss manually, still anchoring it behind the next swing point at every given step of the way. So I do that. That way, I'm still able to trail, still able to allow price move in my direction, still able to allow price flow the way I want, right? But still leaving the stop loss, but not longer at the point where I'd initially set it. Because if there is a shift in sentiment, there is a change in market direction, and price starts to reverse, I do not want to lose what I have made and still end up losing the amount I plan to risk in the first place. If there is already a way I can reduce my risk while the trade is running, why not do that? So the simple lesson here is when I try to set stop loss, I anchor the stop loss behind the next swing point. If I'm selling, I put the stop loss above the next resistance area. If I'm buying, I put the stop loss below the next support area. That's the first step. Number two is I accept the risk. That is, I know exactly the dollar amount I'll be losing if price goes south. I know exactly that amount of money. And when I know that exact amount of money, I simply accept it. What I mean by accept is I look at it and say, this is the worst possible outcome. If the trade hits my stop loss, I would have lost this amount of money. Am I okay with that? Am I fine with that? If I can't accept that, then I have to go back and reduce my risk. If I'm not fine with that, I have to go and reduce my risk. By reducing my risk, I mean reducing the volume. I have to go and do that. So I accept it. If I feel like at this level, I'm okay with this, it allows me let the trade play out where I can. And the third thing I always do is I try to always trail price with a moving stop losses. Now, maybe automatically, like we have just shown ourselves, or when I say manually, I mean literally just going back to modify and adjusting it. So the way we modified it before, we can go back to modify and adjust it. I put what the new level that I want, I put it in there. So I do that. I want to believe that that's clear enough. All right, let me quickly see if I can run through some questions because of our time. Um, all right, all those ones were, can you hear me? Can you hear me questions? All right, let's see. Please, how will I get the recorded parts? Now, we try to record our webinars like this and we try to, post them up on our social media handles, particularly YouTube, right? So you can check back, maybe later on it would have been posted. You can check back on our YouTube handle. Our YouTube handle is HFM Nigeria. So just go looking for HFM Nigeria, and then you can find the video. Ooh, I've tried to post it up there so you can find that, as well as our past webinars as well. They're also there. You can always find all of them there. What is the topic we're discussing? We're talking, I believe maybe you didn't start with us at the early stages of the class, but we're talking about how to effectively set stop losses. And that's what we've been discussing since you came. So what is the color? What is the different color on the chart? Do you mean this red and green boxes that are chart? Now, this is an external indicator. It's called the daily box. It's called the daily box. Right. So I mean, you could get it. I don't know if it doesn't come with the MT4 by default. You probably have to check the source for it online and then you can install it. Just helps me just see price action for a day. If it's bearish, it's most likely red. If it's bullish, it's most likely bluish kind of color. So just gives me some color, some context to my chart, and just helps me see, price volatility per time per day, and it helps me with that per day. So that's what the daily box is there for. It doesn't have any much impact on analysis, but it's something I can add to my chart as well. This says, can you please explain trailing stop and its effect on trade? That's what I just did. Explaining trailing stop. I mentioned exactly what I've just what trailing stop is. Trailing stop is simply setting your stop loss to automatically adjust as price moves in your favor. Now, the effect is it helps you reduce your risk as time goes by. And when it moves into positive region, it helps you lock in your profits as well. So that also helps you as well. Please, by the way, at this time, we can start sending our questions if we have questions. So I can attend to all of them at once, right? So the trading stop helps you reduce your risk and even helps you lock in profits when it eventually moves into the positive region, right? So we have that. Effect on the trade. Well, you could choose to do it manually like that. You could choose to do it manually like that, but I try to always do it. You could choose to do it automatically, like I've tried to show you. But I try to always do it manually since I'm usually closer to my screen and I can always adjust accordingly. So you could also try to do that. All right. Um, Mr. Umo says makes a lot of sense. Thank you very much. Yeah, of course you can do it on the MT5, either the MT5 or the MT4. You can always do. The question says, can I do this on the MT5? Yes, you can do this on the MT5. This one says, why is it not always posted on Telegram? What do you mean by, what are you referring to? What is not posted on Telegram? I'm trying to think of what you are referring to. If you're talking about the webinar, yes, it is always posted on our Telegram channel, right? Maybe not the global channel HFM, but if you're not on HFM Nigeria, then maybe you want to be on that particular Telegram channel. You can reach out to your account managers on that, or you can send me a message on that, after now, right? I can add you to HFM Nigeria. It's on HFM Nigeria Telegram channel that we always post the webinars that we have, as well as the analysis for today. Will I be in worry tomorrow? No, I would not be in worry tomorrow. The team in worry tomorrow would feature Emmanuel Akinola. He's usually the one who handles most of the online classes. So we're meeting him in worry as well as the country director, as well as Mr. Lumide during this. I will not be in worry tomorrow. The reason why he's asking is we have a seminar in Worry, Nigeria tomorrow, the first day of June 2024. Right, but I wouldn't be in the team. We just got back from Akure a couple days back, so we're not going to be in worry as well. Please, can 1 to 2 boost to reward player? Okay, I like this question. Right, the question is it possible to achieve a 1 to 2? A 1 to 2 risk to reward means that you're trying to make double of what you're risking. So in this case, if you're risking, how many pips is it? If you're risking, say 40 pips, for example, then you're trying to make 80 pips. Is it achievable? Can it play out? The concept of risk to reward is not bad in itself. It's not a bad concept at all. I'm just a bigger fan of anchoring my target and my risk based on what I can see rather than double an amount that comes in my mind. Because sometimes, in this case now, for example, if I'm trying to put an 80 pip, target for this particular trade, I'm trying to put an 80 pip target for this particular trade, that may be beyond the next support level. beyond the next area where I naturally should have put my take profit. We've discussed take profit, choosing profit targets. I think earlier, maybe last month or so, we've also posted the video on our YouTube handle, so you can always go and catch that particular one up. But the idea is if I'm setting my stop loss be above the next resistance, if I'm selling, my target should be at the next support. Now, if I'm going to put a 1 to 2, where 2 lands could be well beyond where my take profit should have been. And what makes it worse is these currencies have an average range that they are expected to move based on recent volatility. So if I'm focusing so much on 1 to 2 or the next, double what I'm trying to risk, that may be beyond where this asset may likely move based on the volatility. So that being said, I would rather anchor my stop losses based on the next target. Now, if the next target is not up to 1 to 2, then I'm okay with that. But I don't want to focus, I don't try to focus so much on the target I want in my mind, ignoring what's right in my front as to where price is likely to get to. I hope that makes sense. All right, is there a formula to calculate stop loss? When you say formula, do you mean number of pips? If you're referring to the number of pips, I think if you just subtract your entry price from where you want to put your stop losses, that gives you the number of pips, including the pipettes for your stop loss, right? So that's that. If you're referring to the dollar amount that you would lose if you're wrong, then that now means you need to look at, the pip value, right? So for example, if the pip value is $1 per pip, that means that if you're setting a 20 pip stop loss, that's already $20. If you're trading a micro lot of 0.01 and you have a pip of 20 pip stop loss, then that's like $2. So that can already help you, right? To know the pip value, if you go to our website under tools and education, you can see pip value. Honestly, you will see trading calculators. There you can see pip value calculator that can help you with that. All right. How do you get this? I think you can just check online. Just check online for daily box. Search for daily box indicator for MT4 or daily box indicator for MT5. I'm sure you can find it and download it and you can install it on your MT4, MT5. Although I think this only works on a laptop or a personal computer. I don't think I've seen it being done on a mobile phone this way. But another way you could do it is if you use period separators. A period separator will allow you to, divide your charts based on per day or per hour or per day or per week or per month, depending on the time frame that you're on, right? You can activate that in your settings right there on your trading platform, either on a mobile phone or on a laptop. Sir, is it also important to take profit at specific levels as price moves in your direction? Yes, you can also do that, where you close portions of the trade as price moves in your direction. Yes, you can, right? If price gets to the next, resistance, if you're buying, you can close half of the trade or, 30% of the trade. You can also do that by, let me show you how you do that. Now, if I want to close the trade in profit, first of all, there has to be a take profit already. Let's say if I click on this, I hit modify. What I need to do is change it from modify order to market execution. So I click on the trade, I hit modify, change it from modify order, that's the type, to market execution. And then I change the volume, right? So maybe the volume I want to close, 0.05. I change the volume to the portion I want to close and I hit on close. Right now, this is not going to happen because obviously the trade is not open yet. But if it was open, I would have had close at the bottom here that I can also close. So that can also, help me out for that. So yes, you can. You should actually. Yes, you can. Please, sir. Please, sir, can you go over setting an automatic trailing stop again on HFM and other platforms like MT5? For MT4 and MT5 is the same thing, but I don't think you can do that on the HFM trading platform. I've not tried to do that before. I probably have to check that. If you have a trade running on the HFM mobile app, for example, or maybe you can. Let's look at it. But I can't connect the mobile app to a PC here. Probably have to send me a chat. Maybe later on, I can look into how I can get that for you, right? You can just reach out to me on that. But let me see if it's possible. If I have a trade running and I want to close portions of that trade, right? If I go to my open trade, on that trade, I go to that particular trade and I hit on more. If you hit, yeah, it's possible. It's possible to do it on the HFM platform. Now, let me walk you through how it's done. Right? When you click on your trade itself, where you have more, you click on more, there are options that you have modified trade, you have partial close, you have close by, right? So you have that. So you can just hit on partial close and then select the lot size you want to close. So when you do that, it will tell you the profit amount and then you can click on close. That's good. Thank you. So I have that. When you do that, you confirm and then that portion of your trade would have been closed. So you can do that on, the HFM mobile app, but on the MT4, MT5, you simply right click on the trade. We'll have seen trailing stop right there. Just select the number of pips you want. If what you want is not in this list, click on custom and then you type what you want, number of pips, including the pipettes, and you say, okay, that will help you with the trailing stop. Sir, what if the situation where the risk is greater than the reward? What do I do? Well, this is actually a major concern that some traders have already pointed out to me using this system in the past. Now, if you're using that system and where your stop loss is likely to be is beyond where your target is, now you may choose not to take that trade. Right? You may choose not to. That's if you're not comfortable with that. But personally, I don't mind. I don't mind a situation where I have a one-to-one. I don't mind it. And another thing I also said is it doesn't have to be the farthest swing point, right? The next swing point could be the next resistance, just right here, the next resistance area. That's you could have that. But I usually don't mind having a one-to-one where my risk is basically equal to my target. I don't mind. That's just personally for the kind of trade that I take and the kind of risk that I take. But if you're not comfortable with it, try to reduce your stop loss. Like I said, it's not a law. It's a guiding principle that can really help you. But you could always make that adjustment. If you feel like you're not comfortable with it at all, reduce the stop loss. If there is nothing to reduce and you're not comfortable, don't take the trade. But for me, I really don't mind taking a one-to-one. If it's too much, when my risk is greater than my reward, then I probably might not take that trade or find another way to reduce my stop loss. But yes, I get that concern and I still don't mind having a one-to-one risk to reward. Hello, coach. You're sharing serious nuggets right out of the gate. Thank you very much. But then what is the official email so I can share my recommendation? If you want to reach out to me via email, the email is hadisa, HADISA, hadisa at hflocal.com. I wish I could type that right now, but I don't know if I should have typed. Let me see if I can type this in the chat box. All right. Hadisa at hflocal.com. So I think this can help. You send me. Okay, the chat is okay. Yeah, I sent it in the chats now. So you can send me a mail if you feel like you need to send me a mail, and that's my email address right there. Can you please repeat? I think I've already done this. Repeat the automatic of adjusting your stop losses. I already did that already. So I think that can help as well. I said you can right click on the trade, go to trailing stop and choose the number of pips that you want, right? This one says, in the case of a trading stop, I want to confirm that it will not modify the initial stop loss when the market is going against you. That's to like extend it further. No, 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 no. So for example, I buy at 5, I put my stop loss at 2. If price moves, if I set a trailing stop and price is going against me, my stop loss is not going to go back to 1 or 0. No. But if price is moving in my favor, then my stop loss is going to move higher to close that loss, to reduce, that potential loss on the trade. All right. So I guess that answers your question, Mr. Oyedele. Like I said, for the recording, you can always check our YouTube handle and then you can get that on later. HFM Nigeria, you can get it there. Good afternoon, Mr. Heritage. Does trading stop trail backwards? No, it does not trail backwards. It only trades in line with price. It's trailing price in profit or like moving in your direction, not against you. It's not an indicator. It's not an indicator. It is, it comes with your trading platform. Just simply check on your trading platform where you have modify. You would have also seen the option to option to set the trailing stop like I've already shown you. Please, can you use the 4-hour time frame to avoid too much noise in your analysis? Since the 30 minutes has too much. I think the time frame depends on the type of trade you're trying to take. If it's a swing trade, then yes. A long medium-term trade, then yes, a 4 hours time frame is not bad. But if you're talking about an intraday trade, a sentiment-based trade, I personally feel like a 4-hour time frame is a bit too high for that type of trade. In that case, the 30 minutes is more appropriate. So it depends on the type of trade that you're trying to take that can help you with that. I already explained how to add the daily box to your charts. Like I said, just simply check it online. When you find it, just Google daily box indicator for MT4. It gives you the steps on everything, and then you can always reach out and download and install it on your trading platform. We need to go. Our time is up. Can we use the stop loss to determine our take profit? Well, yes, you can, but I usually prefer to anchor my take profit based on the next key area, next support or resistance, depending on if I'm, selling or buying. But yes, you can use that. I don't really like to hold on to a ×2 rigidly. I'm not saying you can't have that, but that's 1 to 2 is not usually my major determinant for setting a stop loss, right? I try to pay attention more to, what the next key area is on the chart, and that's what I use mostly, right? Okay. All right, so I guess that answers your question. All right. This one says, I'd like to be added to the HFM Nigeria channel. So I'm going to send the answer to this right now. To be on the channel, simply send me your full name. I'm replying this for everybody to see. Your full name. Send me your full name, your HF ID, and your account manager's name. So I'm sending this to everybody in the chat so you can see. To be on the HFM Telegram channel, send me a chat. The chat should contain. I've sent the link to my chats right there. The link to my Telegram chats right there. You can click on the link and join. Send me your full name, your HF ID, and your account manager's name. And then I would add you as well. What if the trading stop brings you close to your entry point and you're not, it's not when it gets to your entry point, it's not closing out the trade. Let's say you buy at 5, price has moved from 5 to 8. Your stop loss has now moved up from where you had initially set it at 2. It's now at 5. Your trade is not going to be closed. No. It's only if price reverses from where it is and hits your stop loss where it now is, that's when your trade will be closed. So as long as price keeps going in your favor, the stop loss will keep trailing price higher and higher in that direction. I can see the questions keep coming in, they're not ending now. We may not be able to take all of them because of our time, right? But please, I've already sent you the link to my chat. You can always send any questions I'm not able to answer in this class right in the chat, and I would also look into it as well. For a day trader, I think 15 minutes, 30 minutes time frame is better. I think it's better. I use it mostly for my entries, right? So you can always play around that as well. That can help you. Please, do I always have to allow my stop loss to be hit, or I can pull out halfway if you're no longer feeling the trade, not because of fear, but you're no longer feeling the trade because maybe the sentiment has changed, it's not moving the way you want, and then time is elapsing in the session, you're no longer feeling it, you can close the trade. You don't have to allow the trade hit your stop loss, but only do that when it is objective, not out of fear, right? All right, so that answers that. I've answered this as well. No, it is not. All right, I've answered this as well. Please, how do we know our account managers? We don't know your account managers. They must have contacted you one way or the other, sent you a chat, reached out to you one way or the other. Check your email. They must have sent you a message or a text message or a mail that has their name and their mobile number. So please check and find it. But in the case where you can't find it, you can let me know. I can have them give you a call again so that you can always, get to know them one more time. All right. And what do you think about people who are trying to spot what the big players in the markets are doing, using patterns formed on the chart, talking about smart money and trading based on that? Well, it's not related, obviously it's not related to the topic, but just a very quick one. Well, I think, see, this is my personal thinking about this. I think you should focus more on what you are trying to do in the market than trying to look for what other people are trying to do, particularly when you don't have the data and you're assuming that or people are behaving a certain way because of the shape and size on the chart. What I'm saying is, I would rather pay attention to the type of trade I'm trying to take based on information, research, and analysis, and take quality trades than trying to look at the chart and try to figure out what somebody else somewhere is doing. After all, whatever the person is doing should be based on trying to make money, right? And trying to make money means they have to be in the right side of the market. By understanding the way to better predict where price is likely to be so that you can be on the right side of the market is by doing analysis and research. So if you on your own already starts to do your analysis to figure out the types of trade you should take and the way you should take the trade, then I feel like you're on the better side than trying to worry about. I do not pay any attention to what smart money concept is about. None. And I'm trading well. So I feel like I would rather focus more on what I'm doing than trying to figure out what somebody else is doing if the goal remains the same. I don't know if that makes any sense. All right. This one says, where can you see trailing stop in MT5? It's the same thing like I mentioned. Right click on the chart on the trade, and then trailing stop is right there in that option. On HTML app, it is what is the importance and how to use closed by tab on the app. Closed by tab on the app. I'm not sure I can see that part where it says closed by tab. I'm not sure I can see that. Oh, the close by tab. Oh, the close by tab. Let me see. Is that, I think, is it a price? I have to check this, but I think that close by is saying close the trade by so amount or you know, I think that's what it would be. Me, if price gets to this particular amount, then close it by that particular amount. Or better still, I think it's just a way to close the trade right where it is. I really think so. I feel like if you check that close by, I'm trying to check it right here on my chart. If you check that close by option, anyways, I can look into it more. You can send me a chat on this. I can look into it more. But if you check that close by option, you would see an option there to click on close for that particular instrument. But I don't use it at all. If I want to close my trade, I just close my trade, right? But it's something that we can look at together. I've not really tried to use it more. I checked the trade now. I saw close by option. I checked another one. I didn't see it there. So I probably have to look into it more for you, but I don't use it at all. If I want to close my trade, the close option is right there under the open trade. All right, our time is up. Let me see. Like I said, I've answered this question already. It says, good afternoon, sir. I want to know, in a situation where your stop loss is placed, according to your guide, and the stop loss does not really maintain the risk to reward ratio. I think I've already answered this as well, right? I try my best to not, focus too much on risk to reward. I pay more attention to what I have available on the chart. I feel like it's a more efficient way to place your trades. The stop losses are more reasonable, allows price to also, oscillate properly, allow enough room for price. And for your targets too as well, it's more reasonable and not just something, a number I want in my mind, but what's really attainable on the chart. How do you contact me? You have my chats box already, my Telegram chat. You can always send me a message on Telegram. All right. Thanks a lot. Can price go beyond the stop loss? Yes, price can go beyond your stop loss. Your stop loss is not guaranteed. And that could be as a result of your it could be as a result of slippage in the market. So it's possible, not just because it's too tight, it could happen across the market. But when you manage your risk, set the right lot size, you're still going to be fine regardless. All right. This one says very quickly, I take a sell trade, it hits my stop loss. Is it advisable to re-enter the trade if my analysis indicates that it's still going to be a sell? Or you should patiently wait out? No, there's nothing wrong with trying to re-enter. I mean, you can re-enter, but please make sure it's objective. It's not an emotional, it's not because you feel like you want to revenge. As long as it's not that, your analysis is still in line. Maybe you put your stop loss too close, too tight, you got knocked out, but everything is still in line. Yes, you can always, re-enter. Please, when is the Abuja seminar coming up? Well, Abuja, I think it's next month. I think June. We have Abuja towards the end of June. You can always check our website under seminars. You can see that, or you can refer to your account managers. And we also post on social media as well. So HFM Nigeria across all social media platforms, you would get the date and time. But you can also check our website. It's already live on the website, and you can always join them right there. Is it a must to use stop loss if you're using a huge capital? Well, I cannot justify not setting stop loss personally. I would always do that. But if you feel like you don't mind, you don't mind, your capital is big, your volume is small. So that means the price moves against you by 100 pips. The loss is still something very minimal, well under 1% of your account. Then maybe, but I would always set a stop loss. All right. I think we are. I think the questions are more. Please check for the Warrior Seminar. Please, like I said, check our website and then you see the address for the Warrior Seminar. Just check our website is there. Social media is also there as well. I don't have the address off the top of my head, but if you check, you can find it there as well. So like I said, I'm seeing so many questions right here. I've answered as many as I can at the moment, right? Like I said, if you want to be, you have my link to my chat already. If you want to be on the Telegram channel, please send me a message on Telegram and I would attend to you right there. Okay, so that's really all we can take at this point. I don't want to hold us, longer than I need to. The webinar should just be 1 hour. So whatever questions I'm not able to answer right now, please send it to me on the chat box and I will attend to all your questions one after the other. All right. So it was a pleasure having everybody around in this particular class. Thank you so much for joining. We'll see you some other time. Take care. Our subsequent webinars next week, Friday again. We'll hit another webinar and then we'll keep going Fridays. Well, I think Friday will be for NFP analysis, but we'll try every Friday except the first Friday. We're going to keep doing the webinars so that we can keep passing information, helping our clients learn and be better. And then we can always be learning right there in the market. So thank you so much for joining us for this particular class. It was a pleasure having you here. Do take care of yourself. Goodbye for now.